Imagine standing in front of a financial megaflood while the vast majority of the crowd out there remains completely blind to it. Something absolutely insane just happened in the silver market that no mainstream media outlet dares to reveal, and JP Morgan sits right at the center of this storm. The data I've just obtained suggests they may have accidentally leaked their entire battle plan for next week. You may have seen silver pull back many times before, but this time is completely different. This time, a government mint broke before the crash even happened. But what does that mean for investors like us? And why are there reports of a bank standing on the brink of insolvency just days before Monday's trading session? A highly credible source connected to the Federal Reserve has just confirmed a piece of information that may send chills down your spine. A financial institution is now insolvent following Friday's collapse in silver prices. We're not talking about a bad trade or a position going underwater. We're talking about full liquidation, total disappearance. What's unfolding is already being compared to the 2008 crisis, but the true scale could be 100 times deeper than anything mainstream finance can even imagine. The most terrifying part? Markets are currently closed. Most investors are enjoying their weekend in complete ignorance, unaware that a ticking time bomb is waiting for them when the opening bell rings. Before we dive into the leaked data, let's look at the raw numbers to grasp how extreme this really is. Spot silver crashed as much as 35% on Friday, plunging below $75 an ounce. To put that in perspective, this was the largest single-day drop in 46 years. We are witnessing the most violent move since the era of the Hunt brothers. The media is calling it a collapse, a bursting bubble. But there is one critical truth they are deliberately hiding from you. Despite that historic intraday crash, silver still finished January in the green, up 19%. That means silver has now risen for 9 consecutive months. That is not a bubble. That is a structural shift in the market, one that no amount of paper manipulation can suppress forever. And this is where JP Morgan enters the picture. If you look closely at the latest COMEX report, you'll see flashing red warning signs. JP Morgan closed exactly 1,959 silver short positions at precisely $75, not around that level, not near it, exactly at the bottom of the crash, right before price reversed. This is not luck. This is not good timing. This is surgical level precision. The largest bank in the United States, the institution with the biggest derivatives book on the planet, closed massive short positions at the exact moment silver stopped falling. This is how they communicate without saying a word. We're done smashing the price. Now it's time to push it higher. Their order flow tells the entire story of what's likely coming next week. When the biggest player closes shorts at the bottom, they are confirming that the price suppression campaign is over and that $75 is a reinforced concrete floor they have no intention of letting silver break again. But the system's tragedy doesn't stop with numbers on a screen. While the paper silver market was being obliterated on Friday, something unprecedented happened in the real world. Australia's Perth Mint officially suspended sales of 2026 1-ounce silver kangaroo coins. What makes this even more shocking is that the decision was made Thursday morning, before the $25 crash even occurred. Think about that. At a price of $117 per ounce, the Perth Mint was so overwhelmed by demand that it had to halt wholesale orders until February 23rd just to process backlogs. If a government-backed mint broke under demand at $117, what do you think is happening at $75? This isn't just high demand. This is a tsunami. Every investor who hesitated at $117 is now mobilizing everything they have to buy at $75. The disconnect between manipulated paper silver prices and real-world physical scarcity has reached an extreme, creating systemic risk. The mechanics of this explosion are clear. Someone made an enormous bet that silver would collapse back to $30 or $40 so they could escape losing positions after 9 straight months of gains. They launched a coordinated, desperate paper sell-off on Friday in an attempt to break the bull market. But the plan backfired as physical demand instantly exploded. One bank may have been unable to source physical silver for delivery, or their collateral evaporated when silver held $75 instead of collapsing to $50 as expected. The end result? Insolvency. As we move into Monday morning, be prepared for emergency intervention announcements or bailouts from the Fed. Premiums on physical silver are almost guaranteed to surge, and the price snapback could be violent. Do not be fooled by paper algorithms. Banks can create paper silver out of thin air. They cannot create physical silver from nothing. This coming Monday will be a decisive moment. We will find out how massive the Fed's intervention really is, and whether JP Morgan truly emerged as the ultimate winner by pivoting at the bottom. This is the moment physical silver stackers have been preparing for. The system is cracking in ways that can no longer be hidden. If you understand this game, leave your prediction below about which mint will be the next to declare sold out after Perth Mint. Don't forget to turn on notifications because missing a critical silver update right now could cost you a lot of money. Share this information as widely as possible because the financial world is about to wake up to a reality we've known for a long time. This market is broken, and its collapse will be catastrophic when physical reality finally overwhelms paper manipulation. We need to face the truth shown on the technical charts because numbers do not lie, and they are telling a story of desperation from the financial elite. Let's rewind to last Friday's trading session. While most people were getting ready for the weekend, a massive sell order was unleashed, driving spot silver down as much as 35% within just a few hours of intraday trading. Let me emphasize how extreme this is. This was not a normal pullback. This was the largest drop in 46 years. We have to go all the way back to 1980, to the era of the Hunt brothers, to find a move of this magnitude. Silver smashed through every support level, plunging from its highs to below $75 an ounce in a clear attempt to trigger automated stop-loss orders and generate maximum panic across the entire market. However, if you only focus on that 35% crash, you've already fallen into their trap. The storytelling technique of the giants is always to create a fog that hides the real trend. Look at the monthly data. Despite free falling below $75, silver still finished January in the green, up 19%. This creates an almost absurd contradiction that any experienced investor should question. How can an asset that just experienced its worst day in half a century still close the month with double-digit gains? The answer lies in the underlying strength of the trend. This is the 9th consecutive month of gains for silver, 9 months in a row, without interruption. In financial markets, a 9-month trend with a structure of higher lows is not a bubble about to burst. It is a structural shift of power from paper money toward real assets. The plunge to $75 is not a sign of the end. It is a final and brutal shakeout. Market manipulators know they cannot stop this freight train forever, so they choose to stage a fake accident to force weak hands out in panic. They need you to sell at $75 so they can scoop up supply and refill their empty vaults. When you look at a 46-year chart, you'll see that crashes like this are often the prelude to an unimaginable parabolic move. Numbers like 35% or price levels like 75 will soon become historical markers, reminders of the moment when the old financial system thrashed around before being drowned by the real value of precious metals. This coming Monday will be a decisive moment. We will find out how massive the Fed's intervention really is, and whether JP Morgan truly emerged as the ultimate winner by pivoting at the bottom. This is the moment physical silver stackers have been preparing for. The system is cracking in ways that can no longer be hidden. If you understand this game, leave your prediction below about which mint will be the next to declare sold out after Perth Mint. Don't forget to turn on notifications because missing a critical silver update right now could cost you a lot of money. Share this information as widely as possible because the financial world is about to wake up to a reality we've known for a long time. This market is broken, and its collapse will be catastrophic when physical reality finally overwhelms paper manipulation. Now we step into the center of the labyrinth, where the giants' hidden cards begin to reveal themselves. This is the part where I need you to truly focus, because what I'm about to share will completely change how you view the financial markets. We often hear about big banks manipulating prices, but rarely do they leave behind footprints as clear as they have this time. Look closely at the COMEX data, our crime scene. While silver prices were free-falling like a stone into the abyss, While the crowd was screaming as their accounts were being wiped out, J.P. Morgan, the most influential force in the precious metals market on the planet, made a shocking move. They closed exactly 1,259 short positions. What's astonishing is not just the nearly 2,000 contracts, but the golden timing they chose. They closed them right at $75. You have to understand that in large-scale derivatives trading, getting filled at the exact absolute bottom of a 35% crash is statistically almost impossible, unless you are the one steering the ship. This is not coincidence. This is financial surgery with millimeter-level precision. J.P. Morgan closing a massive block of shorts at $75 sends an unmistakable signal to the elite. The price suppression play is over. This is the bottom. They used their power to pour a reinforced concrete floor at $75, blocking any further attempts to push price lower, simply because they have pivoted. From suppressor, they have become the driver of the next rally. But why the urgency? The answer lies in the growing fracture between the paper world and the real world. While computer algorithms were dumping paper silver on exchanges, a physical supply catastrophe was unfolding in the real economy. Look to Australia, where the legendary Perth Mint just delivered another shock. They announced a complete suspension of wholesale sales for 2026 1-ounce silver kangaroo coins. Lock in this timeline. The announcement came Thursday morning. That means before the $25 paper crash even happened, Perth Mint had already collapsed under real-world demand. At a price of $170 per ounce, they no longer had enough silver to supply the market and were forced to impose monthly allocation limits just to stay operational. This is the central bank's worst-case nightmare, a total separation between real value and synthetic value. When a government-backed institution like Perth Mint admits it cannot meet demand even at high prices, it proves that global physical silver supply is being drained dry. J.P. Morgan understands this better than anyone. They see the system stress. They see mints running out of metal. And they know that if paper silver is pushed too far below physical reality, their multi-trillion-dollar derivatives complex will explode. Those 1,059 closed short positions are a giant's act of self-preservation. They are abandoning a burning ship and rushing to stockpile the last remaining physical silver before the doors slam shut on Monday. This is no longer a prediction. This is a calculated evacuation by those who see the collapse coming. This coming Monday will be a decisive moment. We will find out how massive the Fed's intervention really is, and whether J.P. Morgan truly emerged as the ultimate winner by pivoting at the bottom. This is the moment physical silver stackers have been preparing for. The system is cracking in ways that can no longer be hidden. If you understand this game, leave your prediction below about which mint will be the next to declare sold out after Perth Mint. Don't forget to turn on notifications because missing a critical silver update right now could cost you a lot of money. Share this information as widely as possible because the financial world is about to wake up to a reality we've known for a long time. This market is broken, and its collapse will be catastrophic when physical reality finally overwhelms paper manipulation. We've just walked through the dry data. Now it's time to confront the raw reality of what is truly happening behind the closed doors of the world's central banks. Ask yourself, why couldn't a 35% crash break silver's uptrend? Why did J.P. Morgan retreat so abruptly? The answer lies in a ticking time bomb called systemic insolvency. Insider sources within the Federal Reserve are leaking a dark scenario about a major bank that is now completely financially exhausted. This is not a minor accounting issue. We are talking about an institution that went all in on a bet that silver would collapse to $50 or lower in order to save massively losing short positions. When silver held the $75 level instead of plunging into the abyss as they expected, their entire collateral base evaporated. They became trapped in what may be the most classic physical short squeeze of all time. Imagine this. You sold millions of ounces of silver on paper that you never actually owned, and when delivery time arrives, you discover that even the largest mints in the world, like Perth Mint, don't have a single ounce available to sell you. That's not just a loss. That's extinction. When markets open on Monday morning, the world may wake up to a completely new reality. If the bankruptcy rumors are grounded in truth, Don't be surprised to see an emergency announcement from the Treasury Department or the Federal Reserve in the middle of the night. They'll call it liquidity provision or market stabilization. But we know its real name, bailout. And every time they bail out a bank, they must print trillions more dollars, diluting the purchasing power of every single dollar in your pocket. This is the most powerful catalyst imaginable for precious metals. For silver investors, Monday is not just another trading day. It is a psychological trial by fire. You will see unprecedented polarization. While the price on your screen may still experience violent swings as algorithms attempt to flush out the last remaining buyers, the premium required to obtain real physical silver in the real world will explode to insane levels. The gap between paper price and real price will no longer be a crack. It will become a black hole, swallowing anyone who still believes in bank-driven price manipulation. JP Morgan already sees this black hole. That is why they drew a line at $75. They know that if silver is pushed any lower, the entire derivative system will shatter under the pressure of physical demand. Monday may be a dark day for banks, but it will be a bright day for those who hold real assets. Prepare yourself for a snapback, a violent rebound in price. When physical reality finally overwhelms paper illusions, the adjustment will not be slow. It will be fast. It will be brutal. And those standing on the sidelines will not have time to react. So ask yourself, are you prepared for the moment when the mainstream financial world finally wakes up? This coming Monday will be a decisive moment. We will find out how massive the Fed's intervention really is, and whether JP Morgan truly emerged as the ultimate winner by pivoting at the bottom. This is the moment physical silver stackers have been preparing for. The system is cracking in ways that can no longer be hidden. If you understand this game, leave your prediction below about which mint will be the next to declare sold out after Perth Mint. Don't forget to turn on notifications because missing a critical silver update right now could cost you a lot of money. Share this information as widely as possible because the financial world is about to wake up to a reality we've known for a long time. This market is broken, and its collapse will be catastrophic when physical reality finally overwhelms paper manipulation. After everything we've dissected, from the historic 35% crash to JP Morgan's at-the-bottom exit at $75 to the physical supply exhaustion at Perth Mint, there is only one message for you. The time for hesitation is over. We are standing at a life-or-death crossroads for our wealth. You can choose to keep believing the digital numbers on a screen. You can choose to believe the comforting words of banks that are quietly running for the exits. Or you can choose to stand on the side of physical reality. Never forget, banks can smash the price of paper silver to any level they want in the short term, but they cannot create physical silver out of thin air. They cannot force mints to produce metal when vaults are empty. In the coming days, as the fracture between paper price and real price becomes irreversible, those who hold physical silver will be the ones holding true power. Silver's price may fluctuate, but the value of 1 ounce of silver in your hand is immutable, and it is becoming scarcer than ever. This is a battle between a decaying financial system and a real asset that has survived for thousands of years. Do not become a victim of the final deception before the true bull market erupts. Remember, 9 consecutive months of gains is not coincidence. It is an early warning, recognized only by those who truly understand markets. This coming Monday will be a historic milestone. Will we witness a shocking bank failure or an emergency Fed intervention to contain JP Morgan's leak? I will be monitoring every micro move and updating you immediately. If you don't want to be left behind in this financial storm, if you want to protect the fruits of your labor from the collapse of the monetary system, then joining our community is the most important step you can take right now. Click subscribe to the Silver Economy and don't forget to turn on the notification bell. In the silver market, being 1 minute late can cost you thousands of dollars, or a once-in-a-decade life-changing opportunity. Do not gamble your future on luck. Leave a comment below with your prediction. Will silver explode Monday morning, or will we see one final sweep lower? I want to hear from real investors. Share this video with anyone you know who is worried about their finances. They need to hear this truth before it's too late. I am your companion on the journey into the age of silver. Thank you for watching, and I'll see you in the next emergency update on the silver economy. This coming Monday will be a decisive moment. We will find out how massive the Fed's intervention really is, and whether JP Morgan truly emerged as the ultimate winner by pivoting at the bottom. This is the moment physical silver stackers have been preparing for. The system is cracking in ways that can no longer be hidden. If you understand this game, leave your prediction below about which mint will be the next to declare sold out after Perth Mint. Don't forget to turn on notifications because missing a critical silver update right now could cost you a lot of money. Share this information as widely as possible because the financial world is about to wake up to a reality we've known for a long time. This market is broken, and its collapse will be catastrophic when physical reality finally overwhelms paper manipulation.